Hello and welcome into commodity culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm very excited to welcome Marc Faber to the program, a renowned economist, decades-long veteran of the finance industry, and the publisher of the Gloom, Boom, and Doom report. Liberation Day and a market meltdown is dominating the news cycle right now. We're going to get his thoughts on where this is all headed and which assets could benefit in the aftermath of a big crash. We're going to discuss the continued valuation gap between gold and gold mining stocks. Is this an opportunity or a trap? We're also going to talk about Marine Le Pen getting banned from French elections and the continued destruction of democracy in Europe, and so much more. Strap yourselves in for my conversation with Marc Faber. Marc Faber, great to have you back on Commodity Culture. We have to start off today's interview discussing Liberation Day, the effects that Trump's tariff barrage has had on markets. We saw a couple trading days where it dropped quite precipitously, recovering nicely today, at least to some extent. But I wonder what your thoughts are on this whole fiasco. How much of an impact do you think this policy will have in the long term? And do you think it could lead to a very serious downturn in the equity markets?
Well, my view was that the market peaked out in the November to January period. And I wrote the report, the Trump top, on January 1. And my view was that markets would go down, largely because the Magnificent Seven stocks were a very high percentage of the S&P 500 and also of the Nasdaq. In other words, the market after 2022 became very narrow. The breadth of the market was narrowing, and only a few stocks went up and made new highs, and the majority of stocks wasn't doing anything. So I was quite negative about stocks going into the new year, 2025. But the tariffs are obviously not helpful. It's a catalyst because fund managers, they were mostly bullish about stocks. They told their clients, go long and buy this and buy that and so forth. And suddenly the outlook for corporate profits is not particularly good, and for economic growth is not very good either. And so they use the tariff issue as an excuse to tell their clients you have to get out of the market. And so there was a significant selling pressure. But I have to point out that the market, as a result of this tariff issue, has become very oversold. We haven't had this oversold condition since the COVID crisis in 2020. And so I think that we can have a rebound here. But by and large, my view is that we are in a time where there are major changes. Like 1981, 82, there were major changes in the sense that inflation began to abate and interest rates began to decline and commodity prices were beginning to decline and so forth. And we went into a period of 40 years asset inflation. I think the asset inflation is largely over. I think from here on, financial assets, bonds will not do particularly well, although they may do better than stocks. And stocks may not do particularly well for the simple reason that they're highly priced in the US. They're more expensive than ever compared to emerging markets. They're more expensive than ever compared to European stocks. My sense is that money will flow out of the US into other assets. And these other assets, who knows? I mean, I don't think that gold is particularly cheap. But equally, if I look at asset allocation by individuals, by and large, individuals don't own any gold. Or if they own gold, they own a few coins, but not anything meaningful like 20% or 30% of the assets.
Hey guys, just a quick break to hear from our sponsor, ARC, silver, gold, osmium for all your precious metals needs. ARC SGO is the place to go. Owner Ian Everard is trusted and given praise even by his competitors for being one of the most honest and informative gold, silver brokers in the United States. And their special is Silver Kangaroos 2023 1-ounce coins, mint fresh for $2.47 over spot. Well, supplies last. Take advantage of the offer by giving him a call at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And now, back to the interview. Well, let's talk about gold for a moment then, because it was one of the assets that held up the best when that initial shock occurred post Trump's Liberation Day announcements. Is that proving that gold is kind of holding its own as a safe haven asset? And in the event of a further correction in the broad market, let's say we enter into real bear market territory, past historically, gold has kind of come out of those sort of downturns at a faster pace than the equities. Do you expect that to occur should we see a real crash up ahead?
Well, there are precedents, and in some cases, gold goes down with financial assets, and in some cases, like during the Depression in the 1930s, gold and gold shares performed well. Also in 1973-74, during the bear market, gold performed well. But there are other periods when it didn't perform well. So my view is, if you want to take advantage of trading opportunities, my view would be to look for stocks that go down the most and become the most oversold, those stock markets overseas or so, and then buy them for a rebound. But longer term, as I said, for the last 40 years, anyone who doesn't own any gold is plainly stupid, because he is trusting central banks. And how can anyone in the world trust the central banks? That is a mystery to me, that intelligent people trust central banks.
Yeah, I completely agree with you. And it's just a matter of taking a portion of your wealth outside of counterparty risk. It's interesting because I don't give investment advice, but occasionally I have friends ask me, oh, I've got $10,000 to invest. What should I do? And I always say the first thing you should do is, if you don't own any physical gold, at least get some physical gold. And people have a real hard time wrapping their heads around that. They do not expect that answer. And I think gold's value as money is not really in the mainstream consciousness at this point in time. I want to jump over to another commodity, and that is oil, because oil and oil-related equities were particularly decimated post-Liberation Day. WTI dropped to around $60, oil stocks dropping much more than that. Some people are saying, well, this could be signaling a worldwide recession. We've also seen OPEC Plus announce that they're actually going to ramp up production, which has a lot of people bearish on the sector as well. How do you view the energy space and the future of oil? Do you see this as a great value long term? Is this something you'd be cautious about? What are your thoughts?
This is a very good question, because it relates to the following. Traditionally, in a recession, commodity prices would go down, and the inflationary pressures would abate, and bonds would rally. This is the traditional model, that in recession, interest rates are cut, bonds rally, inflation comes down, and the economy is bad. Now, in the present situation, we don't know, because the bond yield, the yield on treasury bonds, is not that high. You understand? for me, if someone comes to me and says, Mark, you must buy bonds. Yeah, I have some bonds, but I'm not very bullish about bonds because I can see the rate of inflation, and I define the rate of inflation for the consumer as, say, his cost of living increases. I measure inflation, or I rely on inflation figures that are different than what the government is publishing, because the government is lying about everything. We've seen this with Mr. Trudeau. They're a bunch of liars and incompetent bureaucrats, interventionists who have no clue about anything, but they have to intervene. So anyway, in my view, the cost of living of people is going up at something like 7% per annum. I know people, they say it's going up at about 10% per annum, and I accept that view depending on the household. But by about 7% would be my view. So interest rates at 4% on the 10-year treasury is not that attractive. And we've seen yesterday, there was a big sell-off in stocks. Normally, during a sell-off like we had yesterday, bonds should rally. It didn't happen yesterday. So I hold bonds, but I'm a skeptic. And, I would say concerning gold, I would own gold simply because most people don't own it in a meaningful way. Now, Canadians are maybe more likely to own some gold than other people because it's a big industry in Canada, gold mining. But even Canadians, there are very few people who would own significant quantities of gold, such as, say, Eric Sprott would hold. That is an outlier. Most people, the bulk of their wealth is in their homes. And as you know, in Canada, the homes are grossly overvalued compared to incomes. So I think that the central banks will be forced to print money. Now, whether that money will again go into stocks or not is a different story. Because as you know, also in Canada, the last bout of money printing over the last 5 years or so has not helped commercial properties. Commercial properties are down everywhere. So that is the vicious part of monetary inflation. You cannot predict with precision what will be pushed up and what will be neglected. Commercial properties, if someone had all his money in commercial properties, he's lost 50% by today.
And so just going back quickly to the oil question, would you be bullish, bearish, or neutral when it comes to oil and oil-related equities, let's say over the course of the next 5 years?
My view is that oil is likely to go up significantly, partly because a reasonable bet is that America and Israel will attack Iran. And then we don't know what will happen. Is Russia going to be stepping up on behalf of Iran? Is China going to be stepping up? We don't know. But Iran is a member of BRICS, and BRICS is to some extent a political organization, not as political as NATO, but it is to some extent a political organization. And then if America and Israel attack Iran, we really don't know, but I would imagine that on the news of an attack on Iran, oil would rally at least 10-20%.
Yeah, and it does seem like continued conflict could be in the cards, as well as these escalations ramping up with Iran. What are your thoughts behind that there? Because what does Trump have to gain by antagonizing Iran, bombing the Houthis? He's saying he wants to stop them attacking US ships coming through the Strait of Hormuz, but there's a lot more to this because he's directly threatening Iran as well. He's obviously, we know how close he is to Israel and Netanyahu. Is he just doing Netanyahu's bidding here? Is there a reason for him to be ramping up the aggression towards Iran?
Yes, that's a good question. Personally, I think Trump is being blackmailed by Israel. They have something on him and they can tell him what to do. I think he's a puppet of Israel and he will do exactly what Netanyahu is telling him to do. Now, some people will disagree with my view. I accept that they disagree, but some people will agree with me.
Yeah, I think this is really getting out there into conspiracy theory land, but I wonder if Trump is on the Epstein list, or is involved in that whole debacle, because we haven't seen this list released. It was supposedly going to be released, and it's not. There has to be some reason for that. I may be going off a little bit,
No,
and
you're right.
people will attack me
I
in the
mean,
comments,
they
but
claim they're going to release a list, then half of it is taken out.
yeah,
Always the sensitive material is edited out. Always.
yes.
This is
Now,
the political class. That's why nothing will
yeah,
change. Trump, he has something on the Clintons and on the Obamas, and the Clintons have something on him. And Netanyahu is probably a very powerful figure in American politics, and he most likely has something on Trump.
I think that's reasonable to conclude. I want to read something from your monthly market commentary you posted on April 1st. You said investors are grossly underweight precious metals compared to financial assets, and before the entire asset bubble charade comes to an end, I would expect precious metals to attract far more interest from large and small investors and for prices to meaningfully outperform equities. I would also expect mining stocks to finally outperform physical gold. This has been a great topic of discussion recently on this show, and just in general in the commodity space. Why are the gold mining stocks not keeping pace with the price of gold? What are your thoughts there, and what are the catalysts you're looking for to kind of show you that we could see a rise in the mining equities and perhaps have them catch up or exceed the gains on gold itself?
This is the first bull market in gold and precious metals where equities have actually not grossly outperformed the precious metals, the bullion, the physical. Same case for silver. But I think that wealthy people, say a billionaire, he looks at the financial system. He must know that something is not right. I mean, anyone who looks at the financial system, the derivatives, the leverage, the money printing must conclude that something is not right and it will come to an end. So if you're wealthy, you have $100 million or $200 million or $1 billion, then maybe you say to yourself, I want to own something in physical form, not, as you say, a counterparty risk. That is a very good expression. And then you buy most likely physical. You buy a ton of gold or a ton of silver or platinum. But many financial institutions, they can't do that. The pension funds and so forth. And so the trustees, they go to the fund manager and tell him, by the way, I mean, what is your exposure to gold? What is your exposure to precious metals? And the fund manager says, no, we don't have that. We think that Nvidia is a better bet or Tesla. And then the trustees, one day they say, well, everybody's buying gold. Why don't you allocate, say, at least 3 or 5% of the portfolio to gold. But for the fund manager, it will be easier for him to buy stocks than to buy the physical, because he may not be equipped to buy the physical. He may be equipped to buy ETFs, that I concede. And lately, the money flows into ETFs has been high after being disappointing for 2 years. But recently it's picked up. But again, when I look at people around the world, wealthy people, of course they will say, well, our family has gold, especially the women will say. But when you dig and you ask, how much do you really have? It's usually a few coins. I mean, I'd be interested, and you can ask your viewers one day, how many of you own more than 5% of the assets in gold? I'd be surprised if the number was high, even though you're well known as a metals, say, advocate, precious metals advocate. Now, the question is, of course, someone may say, is gold cheap? No, compared to oil, it's actually expensive. But for most people, to store oil is very cumbersome. It's difficult. But for them they can own oil stocks, which are very depressed. But to store oil is difficult, whereas to store silver, gold, platinum is very easy.
Yeah, some great points. And you mentioned before about capital potentially looking outside of the US in terms of the equity market. And in the aftermath of these tariffs, do you think we could start to see this capital rotation occur where people start to look at emerging markets and other non-US jurisdictions? Is it maybe time to put some of those equities on your shopping list in the case of a sharp correction? Could that be a good place to find value?
Yes, that's my view. But this has been my view for the last, say, 12 months, that emerging markets and Europe are relatively inexpensive. And I mean, I find the Magnificent Seven stocks in America to be grossly overvalued. But other people have different views, you understand? I remember I was at an interview in year 2000, and there was a portfolio manager who disagreed with me because I said that Cisco was vulnerable to additional competition and so forth. And he gave me a lecture why Cisco would be the stock to own for the next 10, 15 years. And the super bulls about tech stocks, they will tell you why you should own Nvidia and Tesla and so forth. I look at the valuations. I think the likelihood that they will perform well is very small. And we have various analyses when stocks sell at the current PEs, in other words, high price to earnings, the subsequent return for the next 10 years is between -2% and +2%. In other words, it's very low. If you buy emerging markets, you can buy them at, say, 7 times earnings. Then the subsequent return is probably reasonably good.
So I want to switch to the realm of geopolitics for a moment here and get your thoughts on yet another politician that doesn't toe the EU line being barred from running for office. Of course, I'm talking about Marine Le Pen in France, being the latest victim of lawfare by the EU elite. Solving this type of problem, though, I think it could require a level of civil unrest that is above most people's ability to engage in. Even the French, with their history, we are already seeing large gatherings and support for her. But it feels like it's going to take a revolution at some point to stop this from happening. What are you seeing? Is there a limit to which people will be pushed to where they will react to this, perhaps in a revolutionary manner? And what are just your thoughts in general on the latest victim of lawfare being executed by the European Union?
People will, of course, disagree with me, but I have very negative view about democracies. I think they lead to mob rule, that the mob is in charge and not that the best people are elected to higher office. In fact, if you look at the politicians in the Western world, the tragedy is that the higher people move up, the more incompetent they are. I mean, this is probably in Europe even more so than in the US, but in Europe, we have, in some cases, like in Germany, the most incompetent politicians, and in the EU especially. But you understand, I, and this I don't understand, but in Switzerland, we are a neutral country. We are relatively independent, but it is likely that they will become member of the EU. And how anyone would be in favor of joining and be governed by the EU Commission is beyond me. I really don't understand it. And I think they're making a huge mistake. But this is what is happening. And in Germany, the AfD is essentially the largest party nowadays, with the most members, with great sympathies. But the other factions, they concluded a coalition against the AfD, and they're still in power. But I agree with you. I mean, I think even in the US, that a civil war cannot be ruled out. You understand my relative bearishness about stocks, and I'm also bearish about cash deposits because I don't think the interest compensates you for the risks. But my bearishness about stocks is that there are many things that can happen that would be unfavorable for the economy and for corporate profits. I mean, a civil war would be a disaster. But an attack on Iran could become World War III. Who knows?
And I want to also talk about the continued assault on free speech in Europe. We're seeing police in the UK and Germany throwing citizens in jail for social media posts. And now the EU is potentially going to try to fine X billions of dollars for spreading so-called misinformation, which basically means whatever the elite don't want to be said. This is truly getting out of hand, in my view. What are your thoughts on the continued erosion of free speech as well? Very interesting to see, J.D. Vance at the beginning of Trump's term basically lecture the Europeans about free speech and telling them they don't truly have freedom of speech, and they were all arguing about it. Somebody was up there crying. I mean, it was a complete joke. But now it really looks more and more like that's bearing out to be true. How does this all end in your view?
Look, I don't know how it will end, but I find it funny because when I went to school and university, everybody was giving speeches and lectures how in our democracy of the West we had free speech and in Russia they didn't have, and so forth and so on. And nowadays it is as you say, that if you have an opposing view, you're not allowed to communicate it. And we've seen this with COVID. During the COVID days, scientists, I'm not talking about somebody on the street, but scientists who had a different view about how COVID spreads and so forth, they were not allowed to express their views. So I'm very skeptical about democracy as an institution, because the problem is in a democracy, people are not really accountable. If someone makes a massive mistake, he's actually promoted in most cases, but nobody ever gets punished. I mean, the political establishment in Washington is most likely highly corrupt. But how many people get convicted? The people who knew about the corruption, like Epstein, they get eliminated. So, you know, free speech is not free speech if you then are eliminated before you can speak.
Yeah. And interestingly, the head of the European Central Bank is a convicted criminal. And that's been great for her career somehow. I mean, I'm surprised that more people aren't pointing the finger at
Yes,
that.
you're absolutely right. I'd forgotten it, but she is actually convicted. She's a criminal.
Amazing. Now,
Amazing. Yes, this is the word, amazing.
yeah, yeah, I want to talk about the war in Ukraine for a moment because it's interesting that Trump at least seems to be trying to bring that conflict to a peaceful conclusion. Well, on the other hand, he's antagonizing Iran and potentially trying to start a different war somewhere else. Um, the EU obviously very opposed to these negotiations, and Russia has made their stance very clear. They've basically outlined what they want in exchange for peace to happen, and it seems like they're very unwilling to move even an inch. Many speculating that's because that they're handily winning the war in Ukraine, and they don't really need to negotiate at this point. What are your thoughts on that conflict and how you expect it to play out? Because Trump's promise was we're going to end the war as soon as possible. That hasn't happened. It feels like it's going to carry on, particularly with the opposition from the EU, Macron and Starmer throwing their hats in the ring, saying we're going to, carry this through and victory for Ukraine, et cetera, et cetera. How do you see that conflict evolving? Do you think we will see a conclusion to it maybe here in 2025, whether that's a Russian victory or whether that's some sort of peace negotiation?
I doubt that the conflict will come to an end anytime soon because too many people make too much money out of the conflict. Westerners, politicians. So I think it can go on for a while. Eventually, people grow tired of wars and they kind of conclude a peace. But the difficulty is that Ukraine is supported by Western countries not to give up any territory. And Russia, in my view, to a large extent, is right to claim that some territories in the east of Ukraine are majority Russian ethnically, including Crimea island. And therefore they claim that this should be part of Russia. And the Crimea island is for Russia strategically a very important point. And I would understand that this is something that is not negotiable. They will keep it under any circumstance. The peace must include the seizing of Ukraine to Russia.
Of the entire country or of just the portions that they've
The,
already captured?
only the portion that they already captured and the Crimea island.
And what are your thoughts on this kind of push for military conscription by some EU member states? Poland talking about implementing military conscription, Germany talking about it, releasing this crazy magazine cover where they show some like 17-year-old kid in an army gear and someone has to die for the country's literally on the front of this magazine. Yeah, what are your thoughts there? Do you think we're going to see a push for this conscription to fight against the great enemy of Russia? I mean, in that case, I spoke to Alex Craner recently. He said that he thinks at some point the EU will stage a false flag, something to get their population really scared, and then they can kind of start lining people up for conscription eventually, and push on with some sort of conflict, whether it's sending people to Russia, sending people to Ukraine to fight. And obviously that would be turn into somewhat of a World War III scenario. Have you seen these calls for conscription? Is this a realistic proposition to conscript people in these countries?
Well, in Switzerland, I went to the army. I had to go to the army. There was conscription. In America, the same. It's just in recent times that they've given it up. But I think it's possible that it will be reintroduced. Now, whether the population will like it a lot, have some reservations, and whether it will be successful. But I think the trend is definitely to have a more, uh, say, a larger military presence in Western Europe than we have at the present time. And I think what has happened with the tariffs, the Europeans now really don't trust America anymore. I think that America has to realize they kind of alienated a lot of countries and people around the world with this tariff issue. And also in America, when the prices of goods will go up because the corporations will tend to increase prices due to the tariffs. And I think the population will not welcome it.
And do you think if they do push forward with increased military capability, more troops, more weapons when it comes to these European countries, many of them without much of a military to speak of, how are they going to fund this whole thing? I mean, in Germany, you had talks about we're just going to cut all the red tape when it comes to funding the military. We're going to essentially print money to be able to afford all these things. We're going to turn Volkswagen into a weapons manufacturer. I mean, there's all this talk. The amount of money this would require is immense. How are they going to raise this money?
Jesse, I think you raise a very important issue. How will governments under the present form in Western Europe and in the US survive in the long term? Because they all have deficits and large deficits. Now, these deficits, they can do three things. They can increase taxes, but in Europe, taxes are so high, it's very difficult to increase them. On who? And you can cut spending, but again, yeah, Dodge in America, they now see it. It's very difficult to cut spending because most of it is actually mandatory. In other words, how are you going to cut the benefits of the veterans who were in the army? How do you cut the benefits that went to the firemen, to the police force, and so forth and so on? It's very difficult to cut that, and that is the major expenditures. How are you going to cut the interest on the debt? that depends on the market conditions. If the bond market rallies, maybe they can make some savings. But it hasn't happened yet. And they may be able to cut interest rates on the short end. Doesn't guarantee that the long end will go lower. In fact, I would bet that if they cut short-term rates, long-term interest rates will go up because it would be perceived as inflationary. So that is out. And earlier on, at the beginning of the interview, you asked a question about, what will happen, how it will end. I tell you, my view is the central banks have no alternative but to print money. And now you have in Canada the candidate Carney. He is, of course, also a money printer. You have to realize that he's a complete Keynesian money printer, and they have no alternative because they are in office for a number of years, say 4 years or 6 years, whatever. They all try to survive their time in office, and money printing can postpone problems. It doesn't solve it. It makes them worse. It makes the problems worse. But equally, in that environment, I want to say once again to your listeners and to your viewers, anyone who doesn't own any gold, if he gets punished through rapid monetary depreciation, and when people say prices are going up, I can argue no. prices are relatively steady. It's the value of money that goes down because of the money printing. In that environment, you must own some precious metals, or as we discussed, maybe some oil or some other commodities, but you must own things that you cannot multiply at the same rate as you multiply money, paper money.
Fantastic words of wisdom there, as always. A great conversation, Mark. Tell us about the gloom, boom, and doom report.
Well, I don't think the discussion was all that great because we simply don't know. You know, we don't know how the democracies in Europe will evolve. My sense is that it will end up in more authoritarian regimes because it's very difficult to get rid of the bureaucracy. A king, you could chop off his head, but how do you chop off the head of millions of bureaucrats? And the Gloom, Boom, and Doom is a website, and I publish reports. I don't know whether they're good or bad, but that is what I do.
Great. Well, I'll put a link to gloomboomanddoom.com, the website where people can check it out.
Very kind of you.
Yes, absolutely. I put that in the description below. I think this was a great conversation. People always love hearing from you, Mark, on this channel. You always bring a ton of value, and it's just your perspective that people can draw from and kind of make their own interpretations of what's going on. But I'll always love chatting with you, and look forward to the next time we can have a discussion.
Equally. Thank you very much. Bye-bye, Jesse.
And thank you for joining us today. As a reminder, this episode is brought to you by ARC, silver, gold, osmium for all your precious metals needs. Contact owner Ian Everard today and take advantage of their special Silver Kangaroos 2023 mint fresh 1 ounce coins at $2.47 over spot. Reach out at 307-264-9441 or by email at ian@arcsgo.com and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.